Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the NASDAQ ETF, also known as the Qs, hence the reason why it's QQQ as a ticker symbol. And I left my lines on the chart from last week's report so you can see how the forecast panned out. So what I'm going to do is go over the NASDAQ market. I'm going to quickly hop to the volatility index and then go to the S&P Russell 2000 and so on. So the Qs worked out and followed my forecast lines exactly as I said it would. And just to recap, this is the line that I drew last Friday after the market closed, and I said that the NASDAQ market would most likely rally up to test this resistance line, and that resistance line was drawn from the highs back here on March 13th. And then I said once it hit the resistance line, it would most likely pull back, and then I drew the rest of the forecast line in the downward direction. Now look at this. Again, it's very accurate in what happened. We moved up Monday, Tuesday, Wednesday, and then on Thursday, let me zoom in here so you could see this. On Thursday, we formed a bearish engulfing pattern which caused the prices to follow through in a downward direction today as I record this on June 8th. Now, what does that mean for next week? Well, you can see that the volume is slightly lower than yesterday's volume, and the divergence, the price divergence from this moving average is quite wide. So what I think we're going to see for the NASDAQ next week is a continuation of this pullback here towards the 20-period moving average. So what I'm going to do is erase all lines to clean the chart up, and then I'm going to draw the forecast lines for next week. So again, I think we are going to pull back to this 20-period moving average just like that, mainly because if you look at this high from May 14th, that former resistance is now going to act as support. And if you look at where the support level is, it's very close to where the 20-period moving average will be as we enter the trading session for next week. So that's the forecast for the Qs. Now, like I said, we're going to now take a look at the volatility index, which is the ticker symbol VIX, and again review what I drew on the chart from last week. I said that the volatility index would most likely drop and pull back. You see that? And then possibly bounce. So we pulled back Monday, Tuesday, Wednesday. On Thursday, we showed a bullish engulfing pattern on the VIX with a higher high today, again being the recording date being June 8th, and a higher low. So I'm going to leave this line in place for the volatility index because I think that it will most likely continue in this upward direction. And with that said, understand that the volatility index is a contrarian indicator to the S&P. So if the volatility index is expected to rally, the S&P is most likely going to pull back. And that's why I'm going to the S&P right away. This week, the volatility index was lower, and you would expect that because of that, the S&P would move higher, and it did. Unfortunately, it broke through resistance and moved higher after I had forecast a pullback from that resistance. So this one was not what we projected. The other markets absolutely spot on. So what does that mean for next week? Well, again, if I zoom in, and I think that the volatility index is going to rally. But again, interestingly enough, we got mixed signals today across the board where the S&P is showing a bullish engulfing pattern right here on slightly higher volume. Now, again, what does that translate to be as far as the weight between the buyers and the sellers? If we see a bullish engulfing pattern and the volume is higher, it tells us that the buyers are still charged up. So what I think could happen for next week is that I think we're going to move up just a little bit to test this resistance line that is drawn from the highs on March 13th. So the forecast is going to look something like this: a move up and then a pull back. because remember, I think the volatility index is going to rally, and that is inversely related to the S&P. Okay, so let's move on to a more broad-based index. That's a Russell 2000. We had a rally right through the week, almost showing a bearish engulfing pattern on Thursday. This forecast didn't work out as well. Now understand, my percentage of accuracy is well into the 90s, the high 90s when it comes to forecasting the weekly market report. But I feel very confident that the Russell 2000 will start to pull back next week. So my forecast for next week is going to look something like this. This is a former resistance high right there, and I think that the market could pull right back to that being new support. And like what we saw in the Qs, this 20-period moving average could very well act as support as it moves towards this newly established support level. So that's what we're looking at right there. Now, if you're interested in learning more about what we do at The Market Guys, just go to www.themarketguys.com, and right there you'll see our webpage. At the top of the page, you'll see a video link right there that brings you to our video library that's loaded with what we call market shots. Market shots are very short educational videos that you can look at on your own schedule, and each one is about 6 to 7 minutes long. And you can see right here, I have one titled The Role Reversal. That's the one I'm drawing your attention to today because we talked about it so much. And I think you're going to enjoy that. Now, coming July, that's going to be July 23rd or the weekend of, I will be in Chicago speaking at the Chicago Mercantile Exchange. That's going to be July 22nd through July 24th. If you're in the area, I really hope I'll get to see you. I'll be presenting right before the lunch hour, and I'll be talking about how to manage risk in the cryptocurrency market. It's going to be a great lineup of speakers. A good old friend of mine, John Bollinger, is going to be there with Dan Gramza and a bunch of other folks that we've worked with over the years. And even if you're not in the Chicago area, I would encourage you to look at travel and possibly picking up a hotel, because this is going to be one great lineup, and you're going to get a lot of information out of that Traders Expo. This is the Twitter feed for the Traders Expo on the Twitter page, and then it'll most likely post all the speakers and the times. I've been asked today to write a couple of articles leading up to this event so that people will get more of an awareness of what I'll be talking about. So that's the Traders Expo and the Market Guys, and I want to thank you so much for following us. That's our weekly market report. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.